Thanks for joining, everyone. We're going to wait a few minutes as we get more participants. I see that they're logging in, and then we'll get started. Well, welcome everyone. I think our people that are logging in has kind of slowed down a little bit, so I'm going to get started. Welcome and thanks for joining us on this webinar about financial planning and analysis. Just a few housekeeping items. So for our presentation today, we will have some polling questions. So if you have any pop-up blockers, make sure you kind of turn those off for our presentation today so it can participate in the polling. We also have disabled the chat function, but there's a Q&A function that you can chat in any questions that you may have, and we'll try and get to those at the end of our presentation. And then if you have any questions after today's presentation, have more questions about any of the things we presented, we'll also have our contact information at the end of our presentation to talk through some of the items that we're presenting. The slides will be made available also after our presentation today. So we'll get the contact information from those that logged in, and we'll be sending those out as well. So you have at the end of this presentation today, a slide deck of what we presented. So again, we're excited today to talk about protect, project, and predict using financial planning and analysis. I am Andrew Wan. I'm a partner at Larson and Company. I've been with the firm for about 10 years, and I've been in public accounting for about 14 years, working with various companies from Fortune 500 companies to small startups. I have a passion to help with small and medium-sized businesses. So if you're one of those, I would love to be able to help you. And that's kind of one of the reasons why we put on this presentation today, is to help those small and medium-sized businesses with making improvements and efficiencies. Fadi, you want to kind of introduce yourself a little bit as well?
Yeah, absolutely. Thanks, Andrew. Hey, everyone. My name is Fadi Hawatma. I'm the founder and CEO of Clockwork. Clockwork was born out of my outsourced CFO consulting firm. Previously, held FP&A and strategy positions at Boeing for the majority of my career, oil and gas consulting, but small business is kind of near and dear to my heart. I grew up in a restaurant family. My dad owned several restaurants in the St. Louis, Missouri area. So super excited to share stories with you guys. I also, consider myself a recovering CFO. So I know all the pains and troubles that businesses go through. I've helped hundreds of companies. I've mentored hundreds of companies. And so, super excited to share our story, share as much value as we can today, and get to answer any burning questions that you guys have.
Excellent. So to start off with today, we want to kind of explain why we kind of came up with this presentation. Really, as we have guided different businesses through the COVID season and the pandemic, who would have ever thought, right, that we'll be hit with COVID-19? According to CDC, it was one of the third leading causes of death in the USA in 2020. So definitely a lot of significant impact, not only to our businesses, but also our lives. I went from working in the office to working from home, and then taking on new roles as a teacher for my kids, making sure that they're doing the homework, counselor for their emotional health, and also sometimes even an entertainer, right? And so we were all impacted by COVID-19, and definitely left a mark, and also requires us to adapt and change that we do business. And so that's why we kind of need more of these financial planning and analysis. A couple more statistics for you. This is the impact of COVID to GDP. You can see that it was near, as of Q2 2020, it was near the level of 2008 and 2009, the housing market crash. So definitely something that impacted us a lot. Specifically with, those restaurants and service industry where some of my clients were, they were definitely impacted by it. Unemployment rose significantly because of it. And thankfully, we had some of those PPP loans. Companies were able to use some of that to help us cash flow and supply payroll for job market. And so we were able to see some of that help in the industry and see that unemployment decrease. Now with the increase of expenditures, from government PPP and other provisions, it also created this higher deficit. U.S. federal deficit is averaged to be 5.1% projected from 2021 to 2030, compared to what it was, about 3% from 1970 to 2019. So definitely something that I know economists are really looking at and figuring out what the best way is. Same thing with the Federal Reserve. One thing that's really concerning is that our corporate bond debt outstanding for this is from SIFMA, that kind of incorporates all of the federal bonds that are outstanding, corporate bonds that are outstanding. But you can see that we're at an all-time high. That means businesses are more leveraged. There are more loans that are given, and with record low interest rates, a lot of people are asking why not, right? Because leverage is less expensive than it was before. We're at 9.85 trillion, and as of Q1 of 2020, but now the updated as of Q4 of 2020, we're at 10.6 trillion. So you can see significant increases to that. So if all these figures, what does that mean, right? Well, one more figure here is that this is from a policyuncertainty.com. They posted a benchmark called Global Economy Policy Uncertainty Index. This index is based on their research on the number of news stories covering economy uncertainty, number of federal tax provisions that may soon be expiring in future years, and also disagreements among economic forecasters as a proxy of uncertainty. So using those three kind of benchmarks, they kind of come up with this uncertainty index. And you can see here that there's uncertainties all-time high. I know there's uncertainty in every industry that I'm kind of aware of. Maybe besides Amazon, it seems like they're doing pretty well with all the shipments that they're doing from COVID. But there's definitely uncertainty of what's going to happen. What are people's spending habits going to be like? What are business going to be facing in the next 5 years? And those could all really change. And it's really because of this type of climate that we're in, companies really need to adapt and forecast in order for them to make sure that they're prepared and they're not hit by surprises, or if there are surprises, they can weather the storm. Another interesting report is a company called Twilio. They send out a digital engagement report as a result of COVID. And what they have learned is that companies, because of COVID, has accelerated this digital age. Before, economists and forecasters were thinking that the digital age may take 6 to 7 years before companies are adopting to some of these things. But with COVID, a lot of restaurants had to turn to technology to do customer pickups, orders. And so that has changed the way we interact with businesses, and as the reason why we also need to adapt as well. So let's talk about financial planning and analysis now that we kind of have the layout of what our climate is and why this is important. If you are someone that have already heard this before, financial planning analysis, we'll talk about some of the basics again. But we'll also talk about things that may help you improve your financial planning and analysis. And then Fadi will kind of talk a little bit about some technology that may be able to help you as well in this process. But before we start, let's do a polling question. How does your company conduct financial planning and analysis currently? Emily, if you can help us launch that polling question, that'll be great. So there are multiple options there for you. Through software, Excel spreadsheets, outsourced to another company, not doing this at this time, or other. How are you doing your financial planning and analysis at this point? Let's see here. Are the results in, Emily? Okay. All right. That's great. So it looks like there's quite a bit of you that's doing it in Excel spreadsheets, which is great. I think it's great to be doing something and you know, making sure that you can do those forecasting. And it's also great to see that some of you are using a software. So that'll be interesting too. If you want to chat or do in the Q&A, maybe share with some of the software they're using. That'll be great for kind of everyone to see and know what sources that they're using. And then for those that are kind of outsourced to another company and not doing, you know, that's great that you have a company that's kind of helping you with that and not doing it this time. Hopefully we'll provide you some information about how to kind of start that process today. Great. Okay, so then thank you very much. So let's talk about, you know, how to create a basic, realistic financial planning and analysis. Really, you know, there's three main things that you want to kind of look at. One is your revenue, and then second, your expenses, and then making sure the third is going through your assumptions, making sure you're looking at those, you know, and with a fine-tooth comb to make sure that they're appropriate. Now, when we talk about making these projections with revenue, it's important to not just kind of make wishes or wish lists. So I wish that my revenue will double without any plans. When you make these financial planning analysis, these are to really make sure that you can project what your company will be like, not what you dream or wish it to be. So for example, if you have a carpet cleaning company, you're saying, well, I want to make sure I am able to increase my revenue. Well, break it down to maybe the different drivers. What does that mean? Does that mean you'll need additional vehicle, and can you attain that? And if that's the case, how would that extra vehicle translate into revenue numbers? And so when you make sure that you're looking at the drivers of these, I guess, these factors of revenue, then you're able to then make it a little bit more realistic and create a better projections of that. Another good way to look at, obviously, is to kind of look at the historical figures to see if I expect my revenue to be this, 5%, how realistic is that compared to what my previous growth is? And where, if that's the case, where will I be able to get these new revenue growth from? Is it from market saturation? Is it from new sales channels or new stores? And so having those type of thoughts as you kind of place into figures makes it more realistic and will help you with your projections. The second part is looking at expenses, making sure that you categorize your expenses between variable and fixed expenses. Fixed expenses are things like rent, or maybe some of the management salaries and some of those insurance or other figures that you just kind of have to pay, no matter what your revenue or other factors are like. And so, you know, obviously with fixed expenses, it's appropriate to look at your previous historical expenses to kind of determine the figure for that. And then variable expenses are things that are variable. For example, if you are manufacturing and you have line workers, you know, and they're hourly workers, how much would that increase as you have more widgets or parts that you're creating and manufacturing. So having those categorized to do those buckets between variable and fixed will help you better understand your expenses and know how to appropriately project it. And then if it's variable, then you can determine which driver can, similar to revenue, what drives those variable expenses to increase as well. And then number 3 is kind of challenge your assumptions. Don't just look at the historical and be content with the assumptions. Sometimes we look at cost of goods sold and say, well, okay, historically, these cost of goods sold is a percentage of revenue, and that may be it. But with this new environment that we're in, there might be things that have changed. There might be some fixed expenses that you were allocating to your inventory before that may need to be reassessed. And so maybe challenge those assumptions, look at seasonality of those assumptions, and identify maybe incidents that may have created or trends that may have created that are different now than before. So these are kind of some basic ways to start off with your FP&A. After you have those kind of created, then you may want to create a projection by month of what your revenue would be or your P&L would be. So in this example, we can see that in the income, they were looking at the last 3 months instead because of COVID. They think the last 3 months of revenue was a more appropriate trend to see where the company is going. So they're forecasting about 2% growth a month. And then you can see some of the variable expenses, cost of goods sold, is in this scenario is just a factor of the percentage of income from the last 3 months as well. And then their variable expenses and fixed expenses are determined at the bottom. And then using these factors, then they're able to kind of project out the P&L for the next however many months or years that they're looking at. So now that we have kind of the basics out of the way of the FP&A, now let's see what we can do to kind of make it better. One of the things to look at, number one, is that it's important for us to create what-if scenarios. So, one thing that we've learned from COVID is that you kind of need to plan for the unexpected. Even though your company has had pretty strong growth in the past, things may change. So what kind of scenarios may you want to create? After you kind of look at your projections, you may want to create scenarios like, what is my break-even model? What is the bare minimum for us to be break-even on net income? What would it be like if we have flat revenue or decreasing revenue? And then create a model for that. Number 2 is kind of implement a rolling forecast. Oftentimes we think of FP&A as a yearly process where we maybe gather information from departments in November, create something for calendar year for next year, and then forecast it, and we stay on to that same forecast. Circumstances may change, so it's important for us to implement a rolling forecast, even for the different scenarios, to see how we're comparing to those different scenarios, and communicate frequently so that everyone's on board and understand what the action plans are to mitigate any unexpected circumstances. The third is kind of watch out for any hidden discretionary fixed expenses. In the past, in the previous slides, we talked about maybe categorizing the fixed and variable. Now, with fixed expenses, oftentimes we may just look at historical trends and say, hey, that's fixed expense is always the same. But maybe look at that a little bit. Does it make sense for us to have those fixed expenses? Some hidden fixed expenses may be in marketing or R&D or salaries or other areas like that that you can kind of look at and make decisions based on what you find. And number 4 is look at comparable industry data or benchmarks. There are resources out there, like Duns & Bradstreet has a great resource on First Research, which our firm kind of subscribes to, that provides financial ratios for different sizes of companies in the industry. And so if you're interested on getting a copy of that, just kind of email me, and I'm happy to provide that report to you so that you can kind of understand how you compare. And by doing these, you'll be able to enhance your FP&A process and making sure you're really prepared for the future. So with that, I think another polling question here is what type of GL system do you use at this time for your your company. There are lots of options here: Intact, NetSuite, QuickBooks Desktop, or QuickBooks Online, Xero, Dynamics 365, Great Plains, IBM AS400, or other. Lots of options out there. And the reason why we ask this question is depending on this answer, there may be different solutions for you for the technology that are out there to help you kind of automate the FP&A. One thing that I often find with Excel, sometimes with FP&A processes, I've gone through that for numerous clients of mine, is that it could be hard to update. And that may be a big deterrent of why people are not doing a realistic or rolling FP&A projection for the company. But it's important for us to kind of know that so that you know what options that you may have. Great. So from here, I can see that most people are using QuickBooks Online. Well, a significant portion of it, 30%. Some using QuickBooks Desktop and other. For those that are using other, if you wouldn't mind, again, chatting in the Q&A, I would love to hear what you're using out there that we didn't capture here. Great. With that, Fadi, I'm gonna let you kind of talk through Clockwork a little bit.
Yeah, awesome. Thank you, Andrew. So one of the things that I want to make sure that we kind of get across the board is FP&A sounds super intimidating, to be honest. You know, a lot of my clients, when I started my shop, my outsourced CFO firm, you know, and I went and told them, do you do FP&A? How do you do it? I can do it for you. They were like, I don't even know where to begin. I don't even know where to think about it. So, you know, FP&A sounds a lot more intimidating than it really should be, especially for companies of you know, smaller size companies, growing companies, sub $100 million top line businesses. And so the important thing with FP&A is, you know, you're literally looking at financial planning. So it's nothing grandiose, right? You know, it's different, obviously, for every company. You know, at Boeing, we're building billion-dollar financial models. And then for my clients, you know, the growing companies, we were building, you know, obviously smaller, much more simplistic models. But the most important thing is to do stuff. So it was good that we saw on the voting that there are a good amount of people actually doing some sort of FP&A. And if not, there's no, you know, you can get started pretty simply. And so I will say that one of the biggest drivers behind Clockwork is to make it even less intimidating, remove as much of a barrier as possible for companies that don't even know where to start. And then for companies that are doing it, I mean, let's be honest, they know how much of a pain in the ass it is to do on a regular basis and grow your company and hire people and all that kind of stuff. So, you know, one of the biggest things, you know, the two pillars that we have around Clockwork are ease of use and accuracy. Because obviously, you know, when you are building these models in Excel, if you're not a finance person, it's going to be pretty difficult to really, really hone in a model that you can update, you can pivot on, you can make all these changes to, build your assumptions, then collaborate with your team on it. Because that's always a huge thing that not many people like doing. I mean, you know, I know it was a challenge for me to be able to share the stuff that I built with my clients, because I send it to them and they look at me like I have 7 eyes and they're like, I don't know where to start, what to do with this. So, you know, Clockwork really takes that barrier out of it. And so, like I said earlier, Clockwork was born out of my outsourced CFO consulting firm. So the way that Clockwork works is we integrate with your QuickBooks Online account and your Xero account. We do have a Sage Intacct integration coming towards the end of the year, probably towards the end of this year. And so what we do is literally takes 30 seconds to create your account. And when I say 30 seconds, I genuinely mean 30 seconds. And that's if you're going slow. You literally integrate and our back end does everything. And so you automatically get a 5-year financial projection, a 52-week weekly cash flow forecast, full-blown dashboard, full-blown metrics dashboard, and the scenario writer. So as Andrew was mentioning, you know, you have to not only plan your baseline forecast, but you have to play all these what-if scenarios, all the what-if questions that kind of keep us all up at night of, you know, what if we hired this person? What if we fired this person? What if we raised money? What if we went into a new market, offered a new product, offered a new service, raised our prices, lowered our prices. I mean, all these different things that affect everyone's business. And so the most important thing is, you're securely getting connected to your accounting system, and then our back end will actually think and learn based on your transactional history automatically. So that is how your baseline forecast is being calculated. And the second you integrate, you get that forecast, you get those projections, those metrics, everything is automatically there for you. But obviously no one knows your business better than you do. So you have complete control to customize all of your assumptions, customize your metrics that you want to look at, customize as many scenarios as you want, and there's no limitations, right? The whole point of Clockwork is ease of use, and so we want to make it as seamless, as frictionless as possible for any company to use this across the board. So unlimited users, unlimited assumptions, unlimited scenarios. So it really, really is a very easy, low barrier way to get the most accurate cash. Because obviously, if you're trying to do any sort of cash flow forecasting, any sort of financial planning, if your stuff is not accurate, I don't care how much time you spent on it, how much money you paid getting it. If it's not accurate, it's not doing you any good. And so Clockwork is, literally built with the mindset of a CFO. I literally took my process of what I built for these hundreds of companies' cash flow forecasts and put it into the software. And so that's literally the brain behind it. And our team, we're all finance experts. And so, we just continue to grow and build the smart back end, the machine learning aspect, where Clockwork legitimately is looking at individual invoices, individual bills, customer payment behavior, vendor payment behavior. We literally look based on that and build everything out for you. So, I can jump into the demo, Andrew. You want me just to pull that up? Let me share my screen. Okay. So so obviously our website, everyone, is clockwork.ai. And our tagline is literally FP&A made smart and simple. So, we'll walk through the demo, but I think there were 6 companies at least that answered to the poll that they use QuickBooks Online. Create an account. Literally, it's zero risk, zero anything. It literally takes several seconds, and that's really where the demo starts, to see how easy it is to get an instant, within a few minutes, a financial model, full 5 years and cash flow forecast. And so when you do log into Clockwork, so this will be your admin dashboard. So for the advisors, for CPA firms, like working with Larson, Larson has a list of their clients that have access to Clockwork on this login screen. So if you're managing for multiple companies, you're managing for multiple clients, whatever it may be, you only have one login. You don't have to mess around with any other kind of complex management system. You'll be able to select which one you want to go into. And then when you do log in, there's 5 major parts of Clockwork, right? We have our dashboard, our model, cash flow forecast, metrics dashboard, and then the scenario writer. And so super high level, obviously Clockwork is a very robust platform with the customization. We try and make it as simple as possible on the front end, but the back end is obviously very complex. So I'm gonna run through kind of some of the more high level highlights that people absolutely love, that our users absolutely love on Clockwork, and then we can go through any questions. I want to make sure we save some good time for questions at the end. So like I said, when you log in, when you create your account, you get all this populated. So there's nothing you're seeing here that would not exist on a brand new account that you create. So you'll have your dashboard that houses your financial model. So this is your P&L, and it will automatically already have your forecast calculated based on historical trends, literally your transactional level data. So we pull in up to 3 years of financial data and plan everything out for you, for your business. And it's all custom built automatically. And so the forecast will be these dotted lines going forward. we're always going to be showing a rolling 12 months of actuals back here. So a super easy way to digest your numbers, to really find, any huge issues, right? You can very simply see if there's any major spikes, major valleys, any kind of major issues with your company. You can identify them pretty quickly. You can deselect or select any of the P&L headers here if you want to drill into certain aspects of your business and don't want to see them compared to everything else. You can literally do 3 years, 4 years, 5 years. You can do a full view of what your business looks like over the next 5 years. Down here is your cash flow. So this will show literally your cash flow on a weekly basis, cash in, cash out, actual versus forecast. So we're showing a rolling 13 weeks of actuals back here. And then here, literally the next 52 weeks, Clockwork will show you your weekly balances. And so the dotted line is going to be the bank balance forecast. And then the bars up and down here are your actual cash in, cash out on a weekly basis. And so this is kind of the high level simplification, the graphical representation of all the numbers behind it. One thing that I will point out is your Clockwork score. So we actually score your company's financial health based on performance, based on all kinds of different factors for your business itself. And so you get an A+, B+, or a C+ score, and we actually reward you. We pay you for doing well financially. So you'll get discounts on the product if you string 3-month streaks, 6-month streaks, 9-month streaks, 12-month streaks. You get additional rewards, prizes, all that kind of stuff for actually performing well. So it's kind of our way of gamifying small business finance. Jumping into the model, so this is really where the workhorse is, right? So all of these numbers, again, are your company's numbers, your company's accounts. All these things that you see here on the left side are all your accounts. So there's nothing that you're seeing on Clockwork right here that's templated. Even when you log in and you create your account, these are all gonna be one for one of what your financial model, of what your chart of accounts in your accounting system are showing. So the second you're in, it's showing all your actuals back here. It'll show you all your accounts here. And then you get to come in and you do the forecasts yourself. So if you look at what Clockwork is calculating for you and you don't like what it says, or you don't think it's accurate, or you know that you're going to be landing a big deal or doing anything kind of custom for your company, you can literally create assumptions directly into the model. So you can add those assumptions, like Andrew was mentioning, those assumptions of percent growth, price times quantity, all these different things. You can build them across the board: revenue, cost of goods sold, and operating expenses, to plan for the future of your business. So you'll simply select the account, and then you get built into the assumption builder. So you get launched in, it tells you select your date range. And again, you can select this all the way out for 5 years out. You'll easily build your date range there. And here are some of the rules, some of the buckets that you can put your assumptions in. So if it's a one-time value for that entire period, if it's a retainer, or if it's a simple contract, whatever it may be, you can just simply type the number here and it'll build out the account, build out the revenue for these 13 months. It's going to be $1,000, and you can literally name it right here, super simply, just like you can in Excel. You will hit $1,000, hit apply. It'll build that assumption and recalculate your entire model based on that assumption. And as you see, it'll highlight it in green to show that that's a custom assumption that you built there. But if you want to get a little more fancy with your assumptions and a little more dynamic with them, you can do price times quantity rules. You can do percent growth rates. You can do monthly, quarterly, annual growth rates. You can do price times quantity, which is, I think, by far our most used assumption field, where you can do headcount planning here. You can, if you have different products, different tiers, different subscriptions, different whatever you want, you can literally build an unlimited number of price times quantity rules as well. So if you're selling 10 different things and you don't want 10 different accounts to show up under revenue, you can build them all out in your assumption builder. and name them all separately, add rule, and you can build as many of these as you want. Another thing is percentage of account. So it's super simple to tie accounts to each other here in Clockwork, where, you know, commission, bonuses, cost of goods sold, if certain things are actually tied to other things like marketing spend is indicative of your revenue, you can tie your accounts together. And again, all of these accounts that you see, even on the drop downs, are one for one your accounts. They're all custom built here. They're not, it's all automatically custom built in here. There's nothing templated, you know, that's going to show up there. Those are some of the assumptions that you can play around with. You know, you can have rolled up forecasts, you can create groupings, you can add new rows here in the model, across the board, revenue, COGS, and OPEX. You can jump into the cash flow. So the cash flow is extremely simple to see. It's very, very cash in, cash out. That's what you see. When you blow it out, each row will show you your cash revenue, which is incorporating your projections from your financial model. And then we have invoices collected. And on the cash out side, we have bills paid. So we're literally pulling every individual bill and invoice out of your accounting system and planning that out for you. Then you have the control to come in and adjust any of those invoices, any of those bills. And the coolest thing here is Clockwork, like I said, is learning based on customer and vendor payment behavior, where if you know that, you know, Daffy Duck is on net 30 in your accounting system, he's always on net 30, but he always pays you net 45. Well, go to the cash flow forecasting tool if it shows you net 30 and not start to learn that it's probably going to be net 45. So the longer you're on Clockwork, Clockwork will literally look at every single invoice, every single customer, and plan out their payment behavior and show you what's going to be most accurate for your company. We pull in balance sheet information as well, so you can plan all those out here in your cash flow for the cash in, cash out. Metrics dashboard, super simple, super easy to understand, super easy to notice. We have these hot button kind of shortcuts. You want to see this year, you want to see last year, past 12 months. I can't tell you how many of my clients used to just absolutely blow my phone up because they wanted to know very simple questions like, what did we make last year? Instead of having to fumble through your accounting system, trying to pull that report, trying to find out, you can literally just log into Clockwork, hit one of these hot buttons, and you see all your top KPIs right there for you. Then the scenario writer is, you know, like I said, this is where you build as many custom scenarios, custom financial models. So if you want to say, you know, you want to find out what raising your prices does, you can come in and now literally select every single one of your custom accounts, from revenue to cost of goods sold to operating expenses, everything all between. If you don't want to forecast out certain aspects of your P&L, you don't have to. So you can select in and build all of your assumptions as you see fit. And again, all these are your accounts. These are going to be 100% what you have in your accounting system. And Clockwork's updating every hour out of your accounting system. So all your accounts, all your actuals, your transactions, your invoices, your bills, your payments, everything is going to be updated every hour out of your accounting system. So everything's going to be super real time. And so build as many assumptions as you want here in your scenario. And then you'll go to a summary, and this summary will actually give you an overall kind of a high level, what's this done thinking? It'll give you a very high level overview of what your business is performing, of how your business is performing based on the baseline forecast and your scenario that you build out. Zoom always takes a lot of bandwidth. But the most important point is when the summary will show you'll hit finish, and this is by far the biggest value that you get out of it, is you'll actually get a completely new financial model with your scenario, with all the custom assumptions that you built. You'll literally get an actuals, forecast, and scenarios. You see any variances, you can see any differences in the plans, the strategic decisions, anything you see fit. and you go back to the summary. You can adjust these to have yearly roll-ups, quarterly roll-ups, only yearly, however you want to see it. You can truncate all these accounts, have a truncated P&L with your actuals, your forecast, and your scenario all on one picture. So super simple way to see what decisions will do to your bottom line and what they'll do to your top line, to see what you should do, what you shouldn't be doing, and how it's actually going to affect your business. And obviously we can get into the settings and all that kind of fun stuff, but unlimited users, unlimited assumptions, unlimited scenarios, super simple to add users. We have 3 different permissions levels. There's admin, which obviously lets you do everything. There's employee access, which is, literally getting in there for your project managers, salespeople, business development, people that will actually be putting in assumptions, building in certain aspects, affecting the invoices and the bills, collection dates, payment dates, that kind of stuff. And then we have view only, which is obviously view only. So you can give that to your bank, your insurance company, investors, stakeholders, or anyone that you don't want to really get into the model and play around with a lot of stuff, but you want them to see this data anyways. And that's Clockwork. Obviously, a lot more features to that, but I think those are kind of the high level, and I wanted to save at least a little bit of time for any questions.
That's great. Thanks, Fadi.
Yep.
So I think at this time, we would just want to open up for any questions that you may have. And let's see here. One question I have, and Fadi, is for you: is Clockwork software in-house or in the cloud and security issues? So can you talk a little bit about that?
Yeah, so it's cloud-based. We use Microsoft Azure for our hosting. We have 256-bit encryption on our end. We are certified app partners with both QuickBooks Online and Xero. So we have a 256-bit encryption on the integration itself. And then you have a 250-bit encryption on top of that with your actual Clockwork account. So it's all cloud-based, all cloud hosted. We follow all the guidelines. So extremely, extremely secure.
Great. Any other questions people may have? If you're interested in Clockwork, or if you're interested in, again, some of the things we offered today, you want some industry data about how to benchmark, feel free to email us. Our contact information is shown here on this slide. And we also offer discounted pricing on Clockworks as our partnership with Clockwork. So if you have any questions, please do reach back out to us. I don't have any other questions. And so thank you very much for your attendance, and we'll be sending these slides out.
Thanks.
We'll see ya. Bye-bye.